When price creates a swing high, okay, just like this, and then price runs bearish, right? Everyone's going bearish, just like this, right? And then price switches up just like this, all right? And it chalks, right, reverses the other way, just like this. And then price runs up, right, and then goes all the way up to take out this high. Now, this high here, I consider it as external liquidity, or for some of you that know this, as buy-side liquidity. That means as soon as the high is liquidated, taken out, right, what we're going to be looking for in dictate, the direction will be dictated from here, where prices are going to want to run bearish. All right, guys, so in this video, we're going to talk about the external liquidity, how to trade it, and why it's so important to trade the external liquidity. Okay, so some of you guys may see this or know this as buy-side or sell-side liquidity, but the reason and primarily why I say external liquidity is because a lot of the times when we look at the market, we're not so keen on actually looking at the external liquidity. What we're mainly doing is focusing on what's actually happening internally rather than externally. So let me just show you right here quickly on a diagram. I'm going to draw it right over here. So the way I always see external liquidity is like this. When price creates a swing high, okay, just like this, and then price runs bearish, right? Everyone's going bearish, just like this, right? And then price switches up just like this, all right? And it chalks, right, reverses the other way, just like this. And then price runs up, right, and then goes all the way up to take out this high. Now, this high here, I consider it as external liquidity, or for some of you that know this, as buy-side liquidity. That means as soon as the high is liquidated, taken out, right, what we're going to be looking for in dictate, the direction will be dictated from here, where prices are going to want to run bearish. Okay, so and the only reason for that is because not only is internal liquidity swept, but we also have the external liquidity swept as well. That means everything combined with the internal and external, there is a huge force that is going to be used here, right? The whole power of the market, once everything is voided out, all the liquidity is voided out internally and externally, okay, there's a huge force that the market will want to use and continue prices bearish just like this, okay? So some of you may see this all the time, some of you may not, right? But let's talk about it quickly here, okay? Once the swing high, or all the external liquidity is swept, where do we want to take price from here? We want to be selling it into a given demand zone, because that's where a lot of traders are waiting for prices to come to, right, in order to get faked out, most likely, something like this, to buy from the demand zone, and then to continue price bullish. So something like this, right, and then take everybody out. Now the external low is swept, as you can see, and from this external low, we're going to wait for prices to continue bullish, right? We're going to wait for prices to switch and then to start running bullish like this, taking out more internal liquidity, right? And then taking out the external liquidity like so, right? Now, I know this was a little bit messy. Maybe I can draw it a little bit better, so you guys can kind of have a better view, a better viewpoint of what I'm trying to talk about. So let me just kind of draw this up a bit better. Something like this. All right, let me just continue here. All right, so again, just to iterate, we are selling here because we have the external high swept. There's internal liquidity creating, just like this. There's going to be buyers here on the demand zone. We're going to be targeting the demand zone for our take profit. It's a safer bet, right? There's going to be people buying from here, a reaction point, then price is going to be sweeping the external low for prices to reverse back bullish, just like this, to take out the internal liquidity with the given external high, just like this. Okay, just something like this. All right, so it's never going to be always picture perfect like this, but this is the scenario that we always look at. This is what we always set up ourselves to wait for in order to continue in those given directions: external high and external low. Buy side, sell side liquidity. This is how you should trade every single time. Now, let me go and show you guys on the live chart example right here. I kind of had did the little due diligence here before, before before I recorded this, obviously, but the whole point stays the same here. You can see over here we have an external low. Now, before I show you the external low, why am I doing this? Why am I doing the external high and external low? The only reason why is because there's the daily. The daily is the higher time frame. That's where all the money is. That's where we need to be staying in. We don't need to be going down the, most likely we don't need to be going anywhere below the 4 hour. The 4 hour can be also subjective, as well as the daily. However, we would like to stay anywhere above the 4 hour and above to get this consistent and power move that we want, because everybody, all the big banks, right, the financial institutions are on the higher time frame. So here you can see a low. That's a swing low right here. It's a low. This is the lowest of the lows. That's the highest of the highs right there, right? So we mark out that previous low. That is your external low, external liquidity, external low, right? You can see how price showed the power move. It showed how price was interested in running price bullish, right? Doing what exactly? Taking out the internal liquidity that's trying to build. Now, everybody that's trying to trade in here is most likely going to be killed, because you have traders here running price bearish, trying to sell, right? You can see that price took out this high. People are trying to sell here, right? Price creating more liquidity for people to continue selling in these false areas, right? As price is trying to run bullish, it's also taking internal lows just like this to continue bullish, right? As you can see. So the external liquidity is the most important piece of structure in trading, because that dictates where the market's going to move. Okay, so when we would wait, when price gets to this high here, it might take a couple of days, a few days. It could take a week for price to take out this high. When prices take out this high, you better bet your bottom dollar that I'm going to be looking for a sell here. Okay, we're going to be looking for sells, and this could be a sell for an entire week, maybe another 2 weeks down here, right? So once we take out this external high, just like here, right? Once price gets up there, we'd anticipate for price to sell off into a demand zone. That would be our TP right there, the first TP. Then we would see another, we could see another external low, just like this. Now this is also liquidity, right? So everything that happened internally from here, from this low, all the way to this high, right? There's built on liquidity in here, internal liquidity, right? Once all this internal liquidity was swept by this move coming bearish like this. Let me make this a bit cleaner, guys, for you guys right over here. Right here, let's do this. Okay, once we see price running bullish like this, creating all liquidity, taking out the external, we then start taking the internal liquidity, just like this. All right, and then taking out the external low to then continue bullish. Again, taking the internal liquidity, right, running bullish, creating more internal liquidity like this, going bullish to take out the external high, which is right here. Okay, something like this. Now, again, it's not going to always be picture perfect, but the concept applies the same. Okay, just like that. It sweeps this high, just like that, and then we expect for price to fall. Now, this is all in due time based on where the major sweep is happening. Now, this is the external low on the daily, right? But if I can draw your attention back, I'm going to zoom out right now and show you guys why this isn't the real external low. But even though we're on the daily time frame, the daily time frame carries a lot of weight, right? A lot of weight, meaning there's a lot of money, right? The banks and institutions trade these time frames, so we would consider this the external because it's the daily. However, if you zoom out, right, you can see the real external low was actually here, right here. So what would we do in this case? This is an internal This is an internal low for this external low, right there. So you can see it. Why does this make sense? Because this external low has a bunch of internal lows just like this. Okay, that means these internal lows is essentially all liquidity for this external low. That means we'd wait for prices to rise bullish. Now you might be saying, well, didn't you say that when price gets to this external low that we'd be looking for price to run bullish? Yes, I did say that. In fact, anything is possible here. Because this is an external low, this also becomes an external low based on the daily. Okay, that means even internal lows and highs on the daily, to me, is external due to the fact that the daily has more demand. If you go on the 15-minute and mark this 15-minute low, 15-minute high as external, price can run bearish or bullish, but I wouldn't consider this an external low on the 15-minute because it doesn't have a lot of liquidity. It doesn't have a lot of the banks and institutions don't trade the 15 minutes. They don't trade the lower time frames. So in this case, prices can still run here. We still have enough data to go on the 1 minute to look for price to run bullish into the supply zone. Now you can start seeing a lot of liquidity being built up. Prices can fake it out like this, right? Come and sweep another low, internal low on the 15-minute, just like this, to run price bullish to take out all the external. It could do this exact same, move, right? But again, our job is just to wait for the externals to sweep, to trade away from them, right? It doesn't take a genius or a scientist to really figure this out, but let me show you more examples here. Let me just zoom out, right? Why did I call this also an internal low, right? It's because if you zoom out, you can see that we have this right here. This is an internal low, this is an external low that swept and is controlling price bullish. That means everything in here, all these are internal to this sweep. That means this is the external low that was swept, right? So if an external low is being swept here, where are we going to look to target? We're going to look to target the supply zone in here. In this case, the supply zone. Now, we are creating liquidity here, right? You never know when price is just going to react again to go bearish, but in this case, it went bearish to the demand, ran the high, ran all this liquidity, right? And once it took out this high, which is liquidity right here, okay, that's an external high. You can see prices ran bearish, right? Right there. So this would have taken weeks, maybe a couple of weeks, maybe an entire week for prices to run bearish. So you've had, let me see, let me count the candles here for you guys. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So about 15 days or 20 days over here, right? It looks like you've already made up your whole entire direction bearish for the first couple of weeks, right? But again, the main destination is the demand zone. We're not trying to be too fancy here. We're not trying to say that this high that was swept, this high here, the external high that was swept here, is going to run all the way down here. This is the first demand zone that we're going to be targeting. That's the internal demand. Then you have the external demand, which is also here. So if prices do shift and sweep an internal high like this, we can look to take prices bearish into this demand zone. This is the external demand, right? This is a bunch of liquidity here. That means there's a huge sign that price will continue bullish like this, right? So bear here with me, guys. I'm not trying to show you sort of how to enter and all this stuff, but I'm trying to merely show you the power of the external liquidity, that this is how the markets work. Look over here. We have a low, right? A high, a low, and a high, right? So this is order flow. This is liquidity. That means every high and every low is liquidity. We marked out this low specifically because this low generated all this liquidity. This is your external low. That means when price gets here, we're going to start looking for buys. Look what happened. Price went up, right? If prices took out this daily high, let's picture that all this wasn't even here, right? All this wasn't created here. And price just took out this high, right? Let's just pretend that. Let's even just do this here just so you guys can see right here, okay? Something like this, okay? So notice what's happening here. We have a daily high. That to me is an external daily high because we're on the daily time frame. Even though this is an internal high to the main high here, okay? This is still external because the power of the daily is really big. There's a lot of moves that can happen here. So price just swept right there, right? And then we would run down on the 15-minute, down to the 1 minute to enter to look for prices to run bearish into our demand zone. Kind of like what you saw right here. We would look for price to sell off, right, into the demand zone, right? So notice how price respects that demand, right? It's not to say that demand's always going to be right. It's just to say that this is the safer option. Obviously, buying from supply and demand zones, it generates liquidity, right? all this is going to be liquidity, right, for prices to run bearish. So we're going to still look for prices to run bearish here, right? The first sweep here, we were wanting for price to break this low, but it didn't break this low yet. Okay, but we're still bearish because it took out that main high. We still want to go bearish. So we look for price to show us some evidence that it wants to go bearish, right? We look for the internal sweep right there. You can see it on the 4 hour too, I believe. Yeah, right here on the 4 hour. There's your high, there's your low. Price swept here, right? So that would be the entry to continue bearish into your demand zone. Where exactly? You could have sold here, and this would be your first demand zone right there. You can call this one as your next demand zone, right? Your next external. This is an internal demand. This is an external demand. This is where those TPs would be. But I'm not here again to show you guys how TPs work, you know, and what have you. It's to show you the power of the external and internal lows and highs. So again, we have another high here, right? We would look to sell off. And when price respects this, when price respects this demand, don't think for 1 second that we should be buying. This is where you need to leave price off and just let it go on and do whatever. You know, you would go to another set of currency pairs, or you know whatever. Maybe the another you know, you could probably trade the US 100, the indices, SPX 500, right? Go find more opportunities. Don't stay in one trade, one chart, and just be like, oh, I have to wait for days now, because this took about a couple of weeks now, right? There's no opportunities here until we have this high swept now. Now we can look for price to run bearish. You can see prices are running bearish, and our first target will be the demand zone, because the demand zone is where we're going to be targeting for price. Look how it swept that high, right here. We're looking to sell right into the demand. Boom, right? It's, you know, it's that easy, but it can be complicated too, guys, as well, if you don't see how price works this way. Okay, let's continue a little bit more. I don't want to make this video too long. Just kind of continue showing you the external. Notice how this is the external low. Price runs up. Price runs this low. You can see price running bullish, right? Price taking out this external high. Price running bearish. Now, this is an internal high to this external high, but again, both of them can be external. The only reason why is because the daily was swept at this high. That means price has the power to still run bearish at this external. There's so much data, so much liquidity, the price can still drive prices bearish. However, this is our true external high because this high is internal to this high, right? All right, let's continue up. So eventually we would wait for this external high now, right? Because everything in here is internal. Everything will be voided out. So what we're looking and anticipating is for price to run up here, take out this high, right? And then continue back where? To the demand zone, right? This is the first demand zone. All right, this could take years. In fact, we're on the daily here. And if I put my cursor here, you'll see that this was, in fact, August 2025. If we get up here, this would be October. So October, September, October, June, let me see. This would be August, September, October, November, December. So yeah, October, close to December, right? Price can take it out. So once price does take out this high, it might be somewhere around January time, December, right? You can see my crosshairs where it says January. Prices can push here and continue bearish here for another 4 or 5 months, right? So this is why external and internal liquidity is so important. It's because we can buy ourselves a lot of time, and we can already see ahead of time where the markets will want to run, right? And we've already made up that direction for our trading. Now, if we just zoom out kind of quickly, I want to show you here, there is another high, right? Which means this high is internal to this external high. But again, look at this high, look at this low, compared to this high and this low, or this high and this low, right? These are relatively small. However, we know that price won't move much. It doesn't move much if you're on the 15-minute, 30-minute time frame, because the sessions open up and they don't run much. Let me just kind of go to the 15 minutes so you guys can see. Notice how we have the New York and London session, and of course the Australian session. I don't know why that's on there actually. Let me take the Sydney, Tokyo away. Right there, right? So if you're just trading London and New York, you're just setting up yourself to trade London and New York based on the open, based on the sweeps, right? So you can see prices running up. You can see this wick came all the way down, took out that low, you could be buying into the nearest supply. So that's how you know price isn't running so much. But it's nice to know where everything is, so that way we could target and look for prices to continue and expect them to continue in that direction, those given directions. All right, guys? So I hope you, oh, and one last thing I want to mention here. Notice how this is an external image right now. This is internal to this external sweep. Why? Because if you zoom out, there's your external low. It swept all this liquidity. So we anticipate the price here would generate and run all the way into this given supply, at least to this supply, right? So the real target here is this supply right here. And so far, as you see, prices are in the supply. Now, does this mean that price can't run this high? No, it doesn't mean that. It just means that there's sellers here now already interested in the selling, right? Maybe a reaction point. People are going to sell, and then it's going to react again to go into this daily high, right? So we look for this daily high, which is the external move, to be swept, because we already have the external move in here. This is internal. This external is here. This is an internal move based off of this external sweep. So external liquidity has more power than the internal liquidity. Okay, guys? All right, guys, I hope you guys liked this video. If you liked it so much, please throw a huge thumbs up. Definitely comment on this video. Let me know what you think. Subscribe to this channel, guys. We love you. We will see you in another video from now.